In a move that has rattled global markets and stirred recession fears, U.S. President Donald Trump has unveiled a sweeping tariff proposal that, if enacted, could reshape the world economy. On April 2nd, Trump announced plans for a universal 10% tariff on all imported goods into the United States, with much steeper duties aimed at 57 individual countries. The plan, if implemented, would represent the largest protectionist escalation in recent U.S. trade history. Trump's reasoning? To protect American manufacturing, reduce trade deficits, and, crucially, to appeal to his political base in the run-up to the 2024 election. But economists warn the consequences could be far more damaging than protective.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steelworkers, auto workers, farmers, and skilled craftsmen, we have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about.
The announcement triggered a sharp sell-off on Wall Street. The S&P 500 plunged nearly 5%, its steepest drop since the early COVID-19 panic in March 2020. Investors pulled out billions, wiping nearly $2 trillion in market value from U.S. stocks in a single day.
It is nerve-wracking to watch markets go down by a couple of percent in a day, but my career spans back to the 1987 crash when, for perspective, the Dow declined 23% in a single day. So this one still ranks up there as very concerning anytime markets are down with this amount of vehemence, if you will, especially on unexpected news. It's worrisome, but it also is worthwhile remembering as investors that reacting in this, especially being pushed into trying to react emotionally, is never a wise long-term decision.
Companies heavily reliant on global supply chains were hit especially hard. Apple, which sources key components from Asia, saw its stock slide by over 9%. Nike fell more than 14%, while semiconductor stocks, already under pressure from US-China tensions, took another significant hit. This isn't just about investor confidence. This is about economic fundamentals. Fitch Ratings has flagged that such tariffs could drag U.S. GDP growth below 1.5% in 2025, far below previous projections. Consumers, too, will feel the heat. Tariffs effectively act as a tax, raising the cost of imported goods across the board, from electronics to clothes to household basics. And it's not just domestic markets reacting. Global trade partners, especially China, the EU, and Mexico, are preparing to retaliate. Past rounds of tariffs during Trump's first term prompted tit-for-tat measures that hurt U.S. farmers, automakers, and tech exporters alike. Trump, however, remains defiant. At a rally following the announcement, he called the tariffs a tool to bring jobs back to America and claimed foreign nations had taken advantage of U.S. trade policies for too long. With economic uncertainty now rising, businesses, economists, and voters are watching closely. Will Trump's tariff play pay off politically, or will it push the U.S. closer to the edge of a recession?